Look at your own reflection in a darkened phone screen for just a moment, and ask yourself a quiet, terrifying question: how many times this month did your own anxious decisions sabotage your financial future? We live in a culture that teaches us to blame the economy, the politicians, or the unpredictable market swings. But forensic psychological audits of retail portfolios reveal an uncomfortable truth. The greatest enemy holding back your wealth isn't out there on Wall Street. It is staring right back at you in the mirror. Why do brilliant, hardworking people who excel in their careers consistently stumble when it comes to long-term wealth accumulation? And what is the hidden mental switch that separates those who panic from those who build generational fortunes? If you want to discover the inner architecture of emotional self-mastery, and learn why mastering your own psychology is infinitely more profitable than mastering complex financial mathematics, hit subscribe right now, because what you are about to unlock will change the way you view your own mind forever. We like to think of ourselves as rational creatures. We believe that when money is on the line, we sit down, look at the cold hard data, weigh the probabilities, and make a logical choice. Yet human beings are emotional machines masquerading as rational thinkers. When a portfolio dips by 10%, we do not feel a minor mathematical adjustment. Our bodies experience a visceral physical reaction. Our heart rate spikes, our palms sweat, and our primitive brain floods with cortisol, screaming that danger is near and immediate flight is required. This is where the legendary investor from Omaha made his greatest breakthrough, though it had almost nothing to do with reading balance sheets. He understood early on that investment success is 90% temperament and 10% intellect. Think about the sheer radical nature of that realization. You can have an advanced degree in economics, memorize every corporate finance textbook ever written, and build complex algorithms that track global supply chains in real time, and still fail utterly if you cannot control the panic rising in your chest when the market turns red. Why is our internal wiring so hostile to the accumulation of wealth? Why does the human brain actively conspire against its own financial security? To understand this, we have to look at how we process time. Evolution programmed us to care deeply about the next 5 minutes, because for most of human history, looking too far ahead was a luxury that led to starvation. When you look at a stock chart or a savings account, your ancient wiring wants immediate feedback. It wants to plant a seed in the morning and eat the fruit by evening. When that feedback loop is broken, when you invest capital and nothing happens for months, or worse, when the numbers go backward, your brain registers it as an emergency. Most people mistake this biological survival mechanism for financial strategy. They sell their assets during a normal market correction not because the underlying business has failed, but because doing something, even something destructive, feels better than doing nothing at all. Action relieves anxiety. That is the hidden trap that drains millions of portfolios every single year. Trading platforms are intentionally engineered to exploit this vulnerability, flashing green and red lights, pushing urgent news notifications, and making buying and selling as effortless as tapping a screen. They do not want you to sit still, they want you moving. Because every time you move, every time you react to fear or greed, someone else collects a fee, a spread, or a commission while your capital gets slowly bled dry by your own restless impatience. Imagine walking into a quiet room where the door is locked from the inside. There are no glowing screens, no ticker tapes, no emergency alerts screaming about the end of the world. Just time, space, and a few durable, cash-generating business assets that quietly go about their work of serving customers day in and day out. That is the mental sanctuary where true wealth is built. When you shift your identity from a reactive trader to a permanent owner of wonderful businesses, your entire emotional landscape transforms. You stop caring what the stock price will do tomorrow afternoon, because you know with absolute certainty that people will still need insurance, still need food, still need electricity, and still buy everyday household goods next year, next decade, and 50 years from now. Consider the real-world case of a modest textile mill in New England that was struggling to survive decades ago. Many investors looked at the declining industry, panicked, and dumped their shares for pennies on the dollar, running away from the perceived wreckage. The legendary investor from Nebraska stepped in, bought the struggling company, and looked past the ugly short-term noise. Instead of trying to force a miraculous turnaround overnight, he used the steady cash flow generated by that boring business to quietly buy insurance companies, furniture stores, and candy makers. He didn't rush. He didn't chase the flashy technology fads of the era that promised overnight riches. He let time do the heavy lifting, allowing the cash to compound quietly behind the scenes for decades, transforming a dying textile factory into one of the most powerful corporate empires in human history. That is the power of the owner's mindset. When you view a stock certificate not as a lottery ticket to be traded on a whim, but as a living, breathing slice of a productive enterprise, market volatility stops being a terrifying crisis and becomes an irrelevant sideshow. Yet, achieving this state of emotional detachment requires confronting the most difficult opponent you will ever face: your own ego. Brilliant people are often the worst investors because their ego refuses to accept being wrong, and their intellect convinces them that they can outsmart market cycles through sheer force of will. They trade frequently because inactivity feels like a waste of their talent. They feel an irresistible urge to tinker, to adjust, to optimize, and to prove how smart they are. True financial maturity begins the moment you realize that intelligence without emotional discipline is like handing a loaded weapon to a toddler. The more brilliant you are, the more elaborate justifications you can invent for making terrible, impatient decisions. To break this cycle, you have to build physical and psychological barriers between your impulses and your money. You have to design a lifestyle where your portfolio requires almost none of your attention. Think about how liberating it is to realize that your net worth does not grow because of what you do today, but because of what you refuse to do today. Every time you resist the urge to check your portfolio, every time you ignore the breaking news headline warning of an impending financial apocalypse, every time you watch your neighbor get rich on a volatile, speculative trend while you quietly hold steady assets, you are winning the war against your own biology. This brings us to a profound realization about the true nature of patience. Patience is not a passive, miserable endurance of waiting for something to happen. Patience is an active state of supreme confidence rooted in deep understanding. It is knowing that if you plant an oak tree in rich soil and give it water, sunlight, and time, it will grow into a towering giant whether you stand over it watching every single leaf or walk away for 10 years. The greatest investors do not spend their days stressing over price charts. They read, they think, they spend time with family, and they wait calmly for the rare moments when human panic creates absurd, irrational bargains in the market. And when those rare moments arrive, when the crowd is fleeing in blind terror and wonderful businesses are being sold for a fraction of their true worth, they do not panic. They step forward with absolute, unshakable calm and deploy capital that they have protected through years of disciplined inaction. Most people fail to capture these generational opportunities because they exhausted their cash and their emotional energy months earlier on mediocre trades, driven by the frantic need to feel productive. They are like runners who sprint the first 100 yards of a marathon at maximum speed, only to collapse in exhaustion before the real race has even begun. Wealth building is a marathon played in slow motion. It rewards those who can maintain a slow, steady, unbreakable rhythm while everyone else around them is running in circles, screaming, and exhausting themselves over temporary noise. As you sit here today, listening to these words, think deeply about the financial decisions waiting for you tomorrow. The next time an impulse flares up inside you, urging you to buy quickly, sell immediately, or react to a sudden market swing, pause, breathe into the discomfort of doing nothing, and ask yourself whether your next move is driven by rational, enduring conviction or simply by the restless anxiety of a mind that has forgotten how to wait. The quietest investors in the room are often the richest, not because they knew something secret that nobody else could find, but because they mastered the rarest skill in the modern world: the courage to sit completely still while time does the heavy lifting for them. If this journey into the psychology of wealth opened your eyes to the hidden forces shaping your financial life, hit that like button right now, drop a comment below sharing your biggest takeaway about the power of patience, and subscribe so you never miss another deep dive into human behavior and long-term investing.